What's up, everyone? It's E-Money, your BFFF, best financial friend forever. Hey, look, it is elections over with right now, and we were just thinking about like, hey, what now that the stress of that is over with, good or bad on who you voted for, what's next? Because the government never was going to save you in the first place, and you are responsible for your own financial condition. So what are the things that we need to be looking at, need to be doing post-election so that we can ensure that we're taking care of our family and making sure that our practice is going to be in a condition where it can provide what it needs to provide. So me and my advisor, Eric, go over some things that we should be looking at, some things that we should be doing going into 2025 so you guys can have a rocking year. And at the same time, one of the things that we really hit upon was making sure that you are getting your associates motivated to produce for you, because that is where you're going to see the biggest area of growth, getting your associates to be on the same page with you. We actually created a financial plan for associates. I want to make sure all of you understand and know that. If you have questions about that, please reach out to us. We'll talk a little bit about that in the podcast, and then we're going to be doing a lot of promotion on that, so you'll see it somewhere. So reach out. As always, go to our website, Econologics Financial Advisors, and you can connect with us that way. Okay, guys, be well. See you on the next podcast.
Welcome back.
Yeah, man. We're ready to go.
I am.
And post-election.
Yes. Tuesday was a big day.
This is an apolitical show.
Yes.
You will never know what our political affiliations are.
Who did you vote for?
We are chameleons. Probably not the same person that you voted for, but that's okay.
Well,
it could be. You know what? We'll never
could
know. Because you know what? I'll never ask.
And I'll never tell.
And I'll never ask, and I don't really care.
Nope.
So
doesn't matter.
But we do have now that, okay, here we go. Post-election planning for people. Now that it's over. Okay.
Yep.
First things first, all those people that are like, quote unquote, waiting now. I just want to wait until the election's over.
Yep.
Right. I want to wait until the election's over.
And there were plenty of them.
Before I want to do something. So let's get that one out of the way. All of you now that where you were using the excuse as the election being to be a stop to do something. And what was it? It was mostly from an investment point of view, right? I don't want to invest any money until the election's over.
Yep.
I don't want to move forward on, solidifying or making changes to my habits and creating a financial plan so, my life can be better. I want to wait till the election's over, whatever the hell it is.
I hear it. I mean, we hear it every 4 years,
Yeah, I mean, it was just, it's an amazing amount of BS of why someone wants to wait. But okay, I get it. Let's say that it was semi-legitimate, which it wasn't. I'm just furious about that right now.
Yeah.
But we do have some things on the horizon that I think people probably need to take note of. We need to look at, talk about. I mean, there's a lot of ways we can go with this. But I guess first and foremost, I don't really think much is going to change at this point in time. No? I mean,
number one, he doesn't take office for 2.5 more months.
Yeah.
And number two, every political candidate ever, when they're campaigning, makes all these promises and these things that they're going to do. And then they get in and bureaucracy, right? You can't just, a president is not a dictator. They can't just force through anything under the sun. And life goes on and 4 years pass. And I'm not saying that there won't be any changes, because there definitely will. But generally speaking, for the average American, life goes on, 4 years pass, and we do it all again.
Well, let's dial it down even more. I'm a healthcare and I own a practice. Okay.
Yep.
And pretty much everything that I saw that the big topics on this election were immigration, were, reproductive rights, were, the inflation was certainly one of them.
Yep.
And what was the other one? I don't know. Moral character, whatever it is. So like I'm looking at, like, I own a healthcare practice. Okay. Most of these big issues are not going to affect my ability to, like, they're not saying that the reimbursement rate is going to go down, or like there's nothing that I saw that was going to like have an impact on healthcare.
No, not in the industries that we work with.
Yeah. So I don't know if there's going to be a lot of changes there. And if you run a healthcare practice, you're still going to have to know how to market. You're going to have to know how to get out there and get new patients. You're going to have to know how to manage people. I mean, the government's not going to help you do any of that.
No.
At all.
Nope.
So, the things this is why when people said, I want to wait, I want to, like, what are you waiting for? Like, none of the election or political theater going to have anything to do with whether or not your practice and your household is financially successful or not.
Yeah.
Zero.
No, none of those issues affect our industries. Really the only thing that I see that could affect the industries that we work with would be tariffs.
Okay. Explain.
Well, tariffs, people think tariffs are like fines or taxes, or I don't know what word, a cost. There we go. People think tariffs are costs that the producers in other countries pay.
Mm-hmm.
False. They're costs that we pay, us Americans pay on the import. So if you add let's just say a 50% tariff, just because it's an easy number, but if you add a 50% tariff on drugs made in India, you're going to pay 50% more for your drugs. It doesn't affect India at all.
Yeah, I get it.
And I doubt that,
I think they're being used more as a threat than they're actually going to be applied. So
agree.
While it's just a tariff sounds threatening, it sounds tough. It sounds like we mean business. It sounds like we're not going to take what anymore and get railroaded by whatever perception there is that we're getting railroaded by other countries. I think it's just a threat. Okay. And puts people on notice, like, hey, we can and we're willing to do this. Probably that's all it is.
Yeah,
but,
I agree.
Is it going to have some kind of an impact? Who knows? Maybe it will. On the inflation issue, I don't necessarily think that there's nothing mechanically that's changed in the way that we function as a society from a monetary perspective. That's going to tell me that anything different is going to happen when it comes to the erosion of purchasing power. It may slow down. Okay.
I mean, inflation's already back to basically pre-COVID levels. It's 2.4% over the last year.
I get it, but it's still, so now basically after the hike, the rate has just decreased.
Yeah, but I mean, we're never going to see deflation. Prices are never going to go back to what they were.
That was my point. It's like there's nothing that's changed mechanically in the monetary system where you're going to see a reduction in the amount of money in circulation at this point.
Yeah.
So that hasn't changed. So people are still going to have to deal with the inflation rate. Now, you may not have to like over speculate in your investments like you were talking about, like before, to keep up with a 10 to 12% inflation rate, which is almost unsustainable to do.
Yeah.
But I think that's get ready. It's still going to occur. People are still going to want, wage increases. People are still going to, you're still going to have to pay higher prices for everything. That's not going to change.
Nope.
And that really wasn't any one political party's fault. That's a system problem, because there's just too much government spending. And
Oh, yeah. I mean,
that hasn't been changed. Now, if they go in there and actually do what they say they're going to do and like cut $2 trillion of government agencies and employees and all that stuff, which is, kind of a bold statement to say, I'm very, very skeptical that they're going to be able to, they'll do something like that.
oh, yeah. I mean,
Very skeptical that they'll do something like that.
That would end up in the court system for years.
Yeah.
You know?
So that really hasn't changed. I think the prospect of like, all right, we're still going to have way more government spending than anything else. And that's really going to be a primary cause of why we continue to have inflation rates.
Yep.
So, okay. So, I mean, that's not going to change. All right. And, what's the stock market going to do? What's the bond market going to do? What are interest rates going to do? I mean, all those things were going to do what they were going to do anyway.
Yep.
I don't know that they were going to change that much. So until I see like some real evidence, like that some of these things are going to actually come to fruition, it's business as usual.
Yeah.
For most people. Okay. And, that means that, if you're a healthcare owner, I mean, you're still going to deal with the same problems that you were before.
Yep.
Because I don't really think that they really addressed anything that's going to have a huge impact on health. Maybe taxes. I don't know. I don't know if I know that some of these tax rates were set to go up at some point. I don't know if that's going to adjust or change. I probably should have looked at that and see.
Yeah, the tax cuts that he initiated in his first term were set to expire at the end of 2025. I would assume that he'll probably renew them. So taxes will be the same that they are.
So basically they'll be the same. And then I think the other thing was I know the estate tax exemptions were set to sunset as well on that. We'll probably get those renewed, So
agree.
We'll stay at the 13 million or whatever it is per person.
Yep. Agree.
That you would otherwise do that. But like by and large, I don't really know. Like, okay, I mean, look at the economy. Is one area going to do better now going forward than others? Like, like where are people going to invest their money going forward? I still think it's the same things that people have been doing.
Yeah, I mean, the only change that wouldn't surprise me would be like oil and gas.
Mm-hmm.
I think he'll loosen some restrictions, but
yeah,
that's
okay.
It.
So energy production could see an increase potentially.
It could,
yeah.
But I mean, we're at, even under the current administration, we're at record levels of output.
Mm-hmm.
So even if I expect that we'll set a new record, but it's not, people forget that Americans producing oil isn't really what brings the cost of gas down. What brings the cost of gas down is the Middle Eastern countries that have access to much cheaper to acquire oil, increasing their supply.
Yeah, this all comes back to supply and demand. It's really kind of simple, and that fact gets overlooked way too much.
Yeah.
So it's that simple of a concept, and if we can recognize that, then I think things will be a lot different in how we move forward. But where was I going to go next on that? I had a thought.
I don't know.
And I just lost what the thought was going to be.
You're talking about areas that you.
Well, I guess another one would be real estate too. He's a real estate guy, so he does like to make things favorable for real estate as much as he can. What's the most favorable thing for real estate investors? Low interest rates. It's low interest rates.
Absolutely.
Now, that could be good for some people who got into some real estate, probably 2021, 2022, if they bought properties or something like that in those time, like right before interest rates went up or when interest rates were going up and had adjustable mortgages or anything like that, which is very few people anyway. But it may be like, I'm thinking like for people that are looking to acquire their buildings, that may be an opportunity to start looking at that right now.
Yeah, rates going down is definitely favorable to buyers.
Yeah.
But on the flip side, when rates go down, prices go up. So
we also thought that rates going up were going to push prices down, which it did not.
No.
Not very much at all. So I really don't have an idea of like when that's going to occur. And, most people that I've heard said that prices didn't come down, at least. Well, I'll say this: prices did come down in commercial real estate.
Yes, but that was not because of interest rates. That was because COVID changed the landscape of work from home, and now there was millions of empty offices.
Yeah, there was a high supply. Again, it goes back
supply and demand.
It goes back to supply and demand, exactly. So, and we're still way short on houses still. I don't remember the last number that I heard, maybe 2 million or 3 million houses short compared to what the actual demand is at this point. So, I don't think housing prices are going to really, I don't think that's going to go down anytime soon. But you may be able to find a building for your location at some point, and that would be beneficial for you long term. Not only that, it's a pretty favorable tax benefit as well. So I think that could be an area that start looking at that. But again, you're not going to be able to get a building, okay, without at least 20% down. Maybe in some cases you can apply for an SBA loan. I forgot what they require right now, maybe 5% or 10%.
I think it's 5%.
Yeah, it's 5%. But, I think to be prudent about this, I'd like people to have at least 20% down, just to be safe on the real estate, semi-safe. And that takes cash, That's going to take cash. So you guys are still going to have to like do the things that we've been preaching for God knows how long going forward. Like the government never was going to save you. It never was. External factors were never going to save you guys, and they still aren't. So it's still going to be an inside job of the things that you're going to have to do to be successful.
Yeah.
I just don't know how that's going to change.
It's not
too much. And I think the factors going into next year that you're going to have to really be good at, number one, financial management.
What do you mean by that?
Just that disturbs me that you don't even know what I mean by that. But
I know what financial management means, dude. I'm asking for the listeners.
How you are allocating money as it comes into your organization. Okay.
Fair.
So how are you allocating those resources as they come into the organization? And by and large, what happened over the last 3 years is that people got lazy again on how they manage their money. They got lazy. And that means that they reverted back to old habits where they didn't pay attention to it. They didn't pay attention to their profits. They didn't pay attention to, their percentages of what should go where. And now a lot of them are struggling, insolvent again, technically.
Yep.
Because they're not putting money in their business savings accounts. They're not taking money out for, what they should be for their compensation. They're not putting money into, have a tax, all the things that we tell them, to have. And so financial management is going to be, I think, a really big deal going forward. You're going to have to be very tight on how you manage the money. And who's going over that with you? Who's
Hopefully
going over
us.
that with? I know, but
yeah.
But I mean, you talk to the majority of owners out there. I mean, we were just doing a meeting with a CPA, and I told him like the frequency in which we go over profit and loss statements. Now, I don't know what I mean, I don't know. I mean, I think some people do it monthly, some people do it quarterly, whatever it is, but there is a frequency involved in it.
Oh, absolutely.
To look at it. Like, what's the last profit and loss statement you went over?
I mean, I go over, and it varies client to client. I have some people I review monthly. Most people I do quarterly, but I mean, I'm going over profit and losses multiple times every week with someone.
Yeah. And what are you looking at?
Well, I mean, number one, of course, we look at income and growth compared to the previous year.
Yeah.
And then expenses. I mean, payroll, cost of goods sold, rent, all your benefits, all your big core expenses that really shape your profitability, getting your business internet bill down $50 a month. It's not hurting you at all. It's $50 a month. It's not going to make any difference. That's noticeable, right?
That's right.
But managing your payroll and being staffed appropriately, I mean, that's every client's biggest expense. So that's where your attention needs to be.
Yeah.
And that's where we put it.
And in a healthcare business, there's really some big core expenses that most people have. Very rarely is it have anything to do with the facility, like people's rent and, the utilities. I never really see where that's out of whack too much.
I do.
You do? Oh,
I have a couple people that are significantly out of whack, but
okay.
Sometimes they're out of whack for good reasons too. Like, okay, I upgraded my facility 2 months ago and I'm growing into it, right? That's fine.
That's true. I get that. But, and then of course, the other one would just be like divisional and overhead expenses, which would be, I guess cost of goods sold would be in that particular equation right there. And that can get out of whack for a lot of people. And that can be a big problem.
Yep.
And then staff pay and benefits and all combine that into one, and if that percentage is just too high, you're just going to see it in your margins. And I think the biggest travesty is just not, not having the right numbers and what you guys are targeting and what you actually need to bring in. I think that's another thing that going over your P&Ls is beneficial to.
Absolutely. You need to know what number do I need to produce to truly be viable.
Yeah. And then that kind of goes into, I think, with the other big thing that people are going to have to start focusing on is your associates and your producers. Okay. And getting them on the same page as you and letting them know, like, look, there is a threshold. There is a production amount that you need to be bringing in every month. Okay. And we need to make sure that you're on the right path to be able to achieve that. What kind of help do you need? Do you need mentoring? Do you need training? Do you need, what is it? But there's a number I need you to bring in every single month. Okay. If you're a PT, I need someone to be seeing 65, 70 patients a week. If you're a associate veterinarian, or optometrist, or whoever, they're like, I need you to be bringing in, $65,000, $70,000 a month in production,
Yeah. And that's definitely one area that people have gotten too lax in.
Yeah.
Because everybody's dealing with shortages of vets, of PTs, of, hiring associates is hard, right?
And they're afraid.
And they're afraid to push. They think it's, they think, okay, if I push too hard, this person's just going to leave and they'll go to corporate down the street and they'll get paid more to do less.
Yep. And if that's the case, and that's the mindset that person has, maybe they never will be a good fit for you in the long term anyway.
Yep.
So you really have to look at, your associates and making sure they're on the same page with you.
Yep.
Now, I will say this, and it's good. We're gonna plug this. We actually created a financial plan for associates now because we wanted them to get on the same page as the owners. And part of what we do in working with associates is make sure that they have an idea of, because most people have some kind of a bonus system in their compensation package where you get paid on some kind of production, or you can, and making sure people get on the same page with their owners and saying, hey, look, how do I make another $10,000 or $15,000 a year? Because it's available to me. I got to produce, I got to be able to do that. But what does that number look like?
Yep.
And once they see that, what ends up happening is they're like, oh, okay. Because an extra $10,000 or $15,000 a year to someone, I mean, how fast can you get out of debt doing that?
Yeah.
How much can you accelerate your savings doing that? Once they see like there's a financial benefit for them and there's a goal that can be attained financially where they're not just always stressed out about something, I mean, it's going to keep them motivated, I think.
Yeah, no, it's good. It's good for both parties. It's good for the associate. It's good for the owner.
Yeah. So we're actually doing a webinar on that, I think, next week. I don't know if that's going to coincide with the timing of this, but we'll have it on demand and we'll make it available. But we're going to continue to like really make sure that your associates are on the same page with you. So if you guys are listening to this, you have associates, you want them to get on the same page with you financially. We have a financial plan for them where we show them how to get out of debt. We show them how to, what savings vehicles to save money into, how much they should save. Pretty much same thing we're doing with owners, just on a smaller scale.
Yep.
Just on a smaller scale. And, it's not expensive at all. And I think it's super beneficial for them to be able to do it. And I would highly encourage you guys to reach out to us to make sure that you get more data on that, because I think it's going to be it can be a game changer to have both people on the same page. Okay, anything else that we need to cover post-election?
No, I think that's it.
All right, man. All right, we'll see you guys on the next podcast.